Hi, this is Roger Conrad. I'm co-editor of MLP Profits with Elliott Gue. The number one enemy of investors today isn't the government, it's not taxes, it's not the economy, it's not potential inflation. I find it to be whipsawing. What do I mean by whipsawing? Basically, the practice of investors setting stop losses, which are in order to sell a stock, too close to the current price of a particular security. Then, if from some random event, a brokerage downgrade, it could be something to do fundamentally with the company, more likely just the day when the market's selling, suddenly those stops are executed. And then we have a waterfall decline in the price of that stock. So what happens to you if you have one of these stops in place? You basically get taken out at a very, very bad price. If you have a profit in the stock, you're going to wind up paying a fairly hefty tax on it. And it could get quite complicated, particularly if you haven't held these things very long. And that's the situation that I think at least some of our MLP Profits subscribers have found themselves in. A lot of people have taken the idea that setting close stops or even setting trailing stops at some point below the current prices of income-producing securities is a way they can protect their holdings. And of course, everybody remembers what happened in 2008. And I'll admit, there's a lot of things that people need to be concerned about going forward. Taxes are certainly one, inflation certainly one, the state of the economy is certainly one. That's why I strongly recommend that every quarter you go through with us, check out how your holdings have done, check out what the numbers are. And we present the most important ones for you in our MLP Profits articles. For all of our portfolio holdings, also for how they rate companies as well. Now what these numbers tell us is whether the underlying businesses of these MLPs are still strong or whether they're weakening. One thing we saw in 2008 was as long as these MLPs stayed strong, they came right back up. Certainly weren't immune from the downside, and Enterprise, in fact, one of the very strongest ones, Enterprise Products Partners, did take a fairly severe hit in the fall of 2008. But if you'd hung with it over that period, you were soon back in very good shape. And in fact, it's now pushed on to a higher high. The key, what was Enterprise's key? Basically running a very strong business. It maintained that strong business, and those who held it have been rewarded. So I urge everyone to keep this in mind when they look at their MLP holdings. Certainly we've seen some big gains. Certainly you have a lot of profits, and maybe some of you should lock some of them in with an outright sale of at least part of your holdings. And we've done that, in fact, with the Williams LP. Just recently. We might do it with some more of them, but stop losses are a terrible idea. They pretty much guarantee you're going to get taken out at a subpar price. And again, as I mentioned, whipsawing, the biggest danger to investors today. And in a market like this where things have picked up, where even a share issue or a unit equity issue by an MLP can take a security down in a single day, you really are running a huge risk here. So again, we don't advise this strategy. The best way to stop loss yourself in any market, again, keep tabs on the underlying businesses of the MLPs you hold. So that's it for today. I'll look forward to speaking with you next time.